Let's dive right into the data and debunk a very common myth. The assumption that salaried employees are automatically exempt from filing an annual tax return is simply incorrect. In today's explainer, we are focusing on the 2025 tax regulations. We will see exactly why the idea that only independent contractors need to file is fundamentally flawed and how many high-earning professionals, especially those with additional income or investment activity, are legally obligated to submit a full annual report.
Here is our agenda for navigating the 2025 regulations. We will cover the payslip illusion, mandatory reporting thresholds, capital markets and foreign assets, tax refunds, practical online filing steps, and finally, the importance of expert compliance.
Let's start with Section 1, the payslip illusion.
We need to challenge the foundational assumption that Form 10-6, which is generated by your employer, represents your final and complete settlement with the tax authority. For high-earning professionals, this is rarely the case. Your employer only knows about the income that passes directly through their payroll department. They are entirely blind to the rest of your global financial activity.
This brings us to a massive gap. There is a profound difference between what your employer deducts at the source, shown here on the left via Form 10-6, and the comprehensive global data the tax authority actually reviews on the right through Form 1301. Form 10-6 is an isolated viewpoint. Form 1301, however, represents your complete financial footprint. The tax authority actively cross-references information from banks, real estate registries, and international sources, utilizing advanced systems to identify any discrepancies.
Moving on to Section 2, 2025 Mandatory Reporting Thresholds.
Understanding the surtax mechanism is absolutely crucial. Tax laws stipulate that an additional 3% tax is levied on high-income individuals. This surtax effectively pushes your marginal tax rate to 50%. But the most important takeaway here is this. The moment your income crosses the statutory threshold, it automatically triggers a mandatory requirement to file an annual return. Even if your employer has already deducted taxes at the source, the legal obligation to file still falls directly on you.
We must carefully examine these updated 2025 income thresholds. If your taxable income regarding the surtax crosses 721,560 NIS, you must file. If you have rental income or foreign income exceeding 375,000 NIS, you are obligated to report it. Furthermore, simply holding foreign assets or accounts with a total value exceeding 286,000 NIS constitutes an entirely independent trigger for mandatory filing.
Section 3. Capital markets and foreign assets.
I want to draw your immediate attention to this number, 2,810,000. It is vital to understand that this figure represents the capital markets turnover threshold, not your profit. A very common error is assuming that only profitable trading requires reporting. In reality, even if your investment portfolio suffered losses throughout the year, the mere act of executing trades that accumulate to a turnover exceeding this amount legally compels you to file an annual tax return.
These specific triggers demand special attention. If you are trading through foreign brokers who do not withhold Israeli tax at the source, holding or converting crypto assets like Bitcoin, or transferring 500,000 NIS or more abroad within a 12-month period, you are required to file. The same applies to holding restricted stock units or executing a relocation without proper final tax adjustments. Your standard pay slips simply cannot capture these complex global data points.
Now let's look at Section 4, Tax Refunds and Optimization.
These mandatory reporting situations actually transform a legal obligation into a powerful mechanism for significant tax optimization. Whether you have made independent pension deposits, donated to recognized institutions, have unclaimed tax credits for a disabled child, or wish to offset capital market losses against your gains, the annual return is the definitive legal tool that allows you to fully exercise your rights and potentially reduce your final tax liability.
Relocation and RSUs serve as a classic example of this. The tax withheld at the source upon the vesting of shares or during an international relocation might significantly exceed your actual final tax liability under the law. Many individuals discover they have substantially overpaid. By filing an accurate and highly professional annual return, you can reclaim these funds, which often accumulate to quite substantial amounts.
Section 5. Practical online filing steps.
These steps provide a clear, actionable methodology for navigating the digital filing process seamlessly. Step 1. Unequivocally determine your reporting obligation based on the 2025 thresholds. Step 2. Gather all essential documentation, including Form 106, Form 1301, and necessary appendices like foreign income and capital gains reports. Step 3, submit the comprehensive digital report via the tax authority's online portal. And finally, Step 4, which is frequently overlooked, you must secure and retain the official submission confirmation. Without this receipt, your return is simply not considered filed.
It is critical to recognize that the timeline is strict. The final deadline for online tax return submissions is June 30, 2026. Gathering documentation, performing a meticulous review, and completing the digital submission process require significant time. Therefore, early preparation is the key to executing a smooth process and meeting these statutory deadlines without unnecessary delays.
Finally, Section 6, Expert Guidance and Compliance. The consequences of failing to meet these statutory reporting requirements are severe. Non-compliance does not merely result in a warning, it leads directly to heavy financial fines and statutory penalties. Worse still, the tax authority holds the power to determine your income based on their best judgment through unilateral assessments. There is also potential exposure to criminal proceedings and, of course, the absolute loss of any eligibility for the legitimate tax refunds we discussed earlier.
This is precisely where the specialized expertise of CPA Amnon Ben Shoshan and Company becomes essential. The firm is singularly focused on this exact niche, providing comprehensive solutions for high net worth salaried employees. They expertly navigate the complexities of global taxation, ensuring seamless, accurate, and fully compliant filing of these intricate 2025 tax returns, saving clients valuable time and preventing costly errors.
This quote perfectly encapsulates the firm's authoritative approach. This process is far more than just filling out a form. It demands a meticulous alignment of your complete global financial footprint with Israeli tax regulations. It requires the precise classification of every single income stream, ensuring a flawless report that strictly adheres to the law and leaves no open vulnerabilities with the authorities.
Based on everything we have covered in this explainer, I want to leave you with the provocative question. Are you absolutely certain your Form 106 tells your whole financial story for 2025? If there is even a shadow of a doubt, now is the time to have your status professionally evaluated. Thank you for joining me for this comprehensive overview.